And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Today is Thursday, December the 2nd. I'm John Hoagland. Thanks for trusting me with your time. Hopefully we're going to see some interesting things in these markets. We always do. They're always challenging, always changing. That's why we're always seeking good context, good risk management, and trying very hard to remain patient. If you're already in the markets this morning, hopefully things are going your way. As always, we're looking forward to your success. One of the things we always look at first on the forecast is economic numbers, and some pretty decent economic numbers this morning. After ADP yesterday had a positive release as far as employment is concerned. We have the jobless claims this morning. The initial jobless claims were expected to be 240,000. They came out lower at 222,000. Continuing jobless claims also lower than expected. They were looking for 2 million continuing jobless claims. Came out 1,956,000. So we got one good number yesterday, good numbers tomorrow, unemployment to look forward to tomorrow. Did I say jobless claims tomorrow? I meant today. Unemployment tomorrow. The only thing left to really look at is the 9:30 nat gas numbers, and nat gas really kind of range bound, apparently awaiting that number. Yesterday, we had the markets, relatively range bound, just seeking new information, and that new information came in the form of the arrival of the Omicron variant virus here in the U.S., put a little bit of fear du jour into the marketplace as they were attempting to stabilize, and now they're attempting to stabilize overnight. News is basically good about this variant. It is not making people sicker than the initial or the Delta variant. So we do have to, however, remember that these headline risks do exist in trading, and we've got to be paying attention. Always, as I say, wear a stop. You got to protect yourself. Always use those stops. As far as OPEC Plus, I've scoured the news. No solid information as to their expectations of changing production in January, at least that I've seen so far. Maybe you've seen something more solid than I have. I've seen no change to a change of 200,000 barrels per day as a boost, I would say, to crude numbers. I'm not real happy about that. I don't like paying more for gasoline, but we'll have to see how that plays out. And always reminds me, we have to trade what we see. If we were fighting that move to the downside yesterday in the equities, fighting the moves that we see every day, we end up getting beat up. So trade what you see. Jobless claims, again, offered yet another look at the labor market here in the U.S., again, prior to unemployment yesterday. Lots of arm bending going on in Washington as they try and raise the debt limit, keeping themselves in business. Of course, they're going to continue to get paid. It's Social Security and our armed forces that might end up having to wait to get paid if the government does shut down. All right. As always, make sure you hit the lucky like button, share, comment, question, feedback, and heckling are always welcome. I can't say enough how much feedback is important, not only to me but to the Top Step as a company. We've built this on your feedback, on your ideas, on your recommendations. Of course, we're keeping our experience, top of mind in the things that we're doing to try and help traders improve. But if there's ever any feedback, just let us know. As always, it's very important to us. And make sure you subscribe to our YouTube channel so you get notified when we do go live. Taking a look this morning early at the VIX, the dollar, and the 10-year yield. It's a 20% spike in the VIX yesterday as the equities moved to the downside. It's down about 5% off the high, or at least off the close from yesterday. Right around 29.52 last time I looked. The dollar index off that high, a little bit lower this morning at 95.90, and the 10-year yield up slightly at 1.42%. As always, gotta say good morning to everybody. Let me get things set up, and let's see how people are doing this morning. What's on your minds? Ron, first one in the room, you win the prize. Chris, good morning. Zerain, Brian, Janus, Jeff Mullins, Charles March, my brother Rick, love you, buddy. George, Vince, Alfred, first day in the pro account. Take your time, Alfred. Every time we move up in another level of success, and I view getting into the pro account a level of success. We go from trading on a simulator, which is no accountability, no rules, to the trading combine, which there's rules, accountabilities, and consequences. And as we move further along that continuum, pressure starts to build. Give yourself time to get your head wrapped around the idea that you are making money, and just stay with your process. I think a lot of traders start to get this idea that they're going to have to change things, or they really want to amp things up once they get to a funded account or the pro account, and it's not the case. You want to dance with the one you brung. Stay with your process. Stay with what brought you to this level of success, and we're looking forward to seeing you continuing to move along that line of success. Success is never that straight line, unfortunately. It's a twisted mess, but we are always looking forward to seeing improvement and success in our traders. So, Alfred, trade well, stay calm, stay patient, stay in your process. Good things will happen for you. George, good morning. Lacey, George says good morning. She's looking over here like, thanks. Hey, all right. She's a little calm today. Mo, good morning. Mo, I'm wondering if you're our old friend Mo Haddad, been with us on and off for many, many years. If you're not, Mo, it's good to have you here. Anyway, Isaac, Brody, good morning. Ryan, Merrick, good morning. Jim, Johnny, Frederico, Nelson, dead letter opener. Ahoy, traders of immense volatility. Yes, we are pirates, I guess, in that way, right? Ahoy. Wen, Main Point Big Ideas, good morning. Long time no see. It's good to see you, Main Point. Peter, good to see you. Dr. VJ, Rob. My pleasure, Rob. I don't know what to tell you. I really enjoy doing the market forecast and talking markets with traders. And, unfortunately, only one group coaching this week, but next week we'll have group coaching on Monday and Wednesday. Let me put the link in there so you can sign up for it right now if you choose to. It's at 1 o'clock p.m. Central Time on Mondays and Wednesdays. We did a pretty decent session yesterday. I always get some good questions from Fred Decker, and always good questions on the fly. Hopefully it was helpful for everybody that was there yesterday. David, Andre, Mustafa, interesting event, Jobless claims. Yeah, I'm just pleased that it looks like we've got folks getting ready to go back to work. And you look at our supply chain, we sure need them. Alikram, good morning. Dead letter opener. Apple might get beat up today. Yeah. Yes, I was reading something about that, and I was also reading about Major League Baseball. Major League Baseball now in a lockout. Some collective bargaining issues with Major League Baseball. It's a good thing they're not in season. Hopefully, it's not going to affect the beginning of spring training, which actually starts in February. February. So let's see. December, January, February. We got 2 months before spring training starts. Hopefully, they'll get things figured out. Level 2, just heckling. I like it. Rod, good morning from Colorado. Rod, man, I bet you are hopefully in some beautiful scenery there. I just got back from Tucson, Arizona, up there in the foothills of the Catalina Mountains, and it was warm and deserty and saguaro cactus, but just beautiful to be in the mountains. I think when I retire or I can finally move away from Illinois, I'm going to the mountains. My wife, however, will probably going to the beach. So we'll just hang around, right? Yeah, Sean, dance with the one you brung. Absolutely. Absolutely. Hello, Mr. Shine's Mystery Channel. Rod, I think I'm trying to get to everybody here. Dante, Kevin, Manuel Caesar, good morning, Daryl. And Tanya. Tanya is around. She pops in once in a while for the forecast and the recap. If you are in our Discord channel, she's usually pretty active in that Discord channel. And I agree, I miss Tanya when she is not with us. But yeah, you can find her in our Discord channel. If you get into the Discord channel, she's speaking quite a bit. I believe mostly in the Equities channel. Ricardo, good to see you. And Jason, good morning from West Texas. Jason, you must be very interested in what's going on with crude oil. We've had a couple of past funded traders do interviews with us, and one of them was in the industry, and when crude oil was down under $50, a lot of them got laid off. So check out the interview with Cindy. I'm thinking about calling Cindy and seeing how things are going for her and the industry and overall in Texas. Yeah, the beach may be in Chicago because of climate change by the time I retire. Nemo, I hope it's not going to be that long. I've got a few grays here. I've been around the block a couple of times, but I don't know if I'm ever really going to retire. I don't know if I can step away from the markets. And main point, I'll get some information for you on getting you into the Discord channel. See if we can't do that for you in the forecast tomorrow morning. We can tell everybody. So, and on that note, we're going to start looking into these charts as always. We start with the daily in crude oil. I got my notes here. We're ready to go. We got about a minute here before the 1 minute open. Let's take a look and see what we're seeing in the charts here. Here we go. So this is the daily in crude. We've come off considerably off our highs, of course. Downside momentum, however, does appear to be slowing to some degree. We've finished rollover. We're right in the middle of this front month cycle of January. So we're going to start to look at volume and open interest with a little more clarity. Yesterday, we lost 18,000 in open interest on an attempt to continue to move down below the weekly kickoff low, which was 67.10. We've got our moving averages, the whole moving averages, largely holding below price. Doesn't mean that the market is going to change direction now. It just gives an indication of a potential drop-off in momentum. Yesterday, we lost volume, lost open interest on an inside extended trading hour day. Typically, that's going to happen. Last night, we traded up to and traded as resistant our weekly kickoff low, which is 67.10, slowing volume. We did close below that weekly kickoff low. That's one sign of acceptance. Second day in a row, actually, that we did that. We're looking for acceptance below this level through time. We are getting that acceptance. So I'm still looking for the opportunity to try and sell strength in this market. And that can all change in a heartbeat if OPEC Plus comes up with anything substantial and any changes they're going to be doing in January. Now, we did have a late spike yesterday in crude oil, and it looks as though we are opening below that late spike. Let's take a look quickly here into the 30-minute chart. Yeah, our late spike was very small, wasn't a very deep late spike, which I kind of prefer. You can see it right here at the bottom of the range here yesterday. Might be able to see it better on this TPO chart. There's our late spike. We did close inside of it. So the market was moving lower, but did not have time necessarily to accept below it. Now we've opened with the gap. It looks like we've left our opening range at the high of the session. We're going to take a look at the 1 minute here. We should be able to see that. There's our 1 minute opening range. We're moving below the opening range. In this situation, it might be an interesting spot for us to look for a short below the opening range with our stop just above the opening range. How big is the opening range? It is, 806. See, this is not showing me the correct numbers here. 864.08, 64. Boy, I guess, boy, this is a big opening range. And showing some confidence to the downside. So if we've taken the opening range trade, which is, just below the opening range, that first minute of trade, when it breaks out below it, you get short. But this is a pretty substantial opening range. I mean, this is a big number. Be very difficult to take it. But again, it's showing some confidence to the downside. Let's go back to the 30-minute chart and see what we're seeing. So we did open with a gap. We've got a very big range starting already. Good push to the downside. We were looking at yesterday's low as an important level. It almost looks like there was some information from OPEC that came out just in the open. I don't have time to look. I don't have time to double check that, but it certainly looks as though that might be the case. So as long as we've got this gap, as long as we've left that opening range at the high of the session, I'm looking to sell strength until proven wrong. Unfortunately, that the high of that opening range is a pretty substantial, big opening range. Look at where we are now. We've already got, here's the high of the opening range right up here, 64. Well, let's look at it really, 64.73. We're already almost $2 full below that level, below the high of that opening range. So a pretty decent downside move here right off the open. If you caught that opening range, God bless, you've got a hell of a nice trade going. And that's why we look at that opening range. It can be indicative of early control by sellers or buyers in the session. The opening range today saying, we're going to be sellers. Tuesday's low was going to be pivotal, and boy, was it. 64.43. We opened, we broke down below it, leaving the opening range at the high of the session. I'm going to be looking for opportunities to sell strength. Again, where's our next move? Where could this move to the downside begin to terminate? I've got this swing low down here, 60.77. So we may have another couple of bucks to this downside before testing this swing low. There's a lot of space between swing low here, our weekly kickoff low. It's a pretty decent move here. Boy, oh boy, I wish I was in the right seat to catch that opening range trade, because that was a doozy. We're going to see that the opening range being so big is something that doesn't happen that often. I mean, this is a large opening range. I almost found it difficult to believe. Hang on a second. So the low of the opening range, 64.08, the high, 64.73. So a 65 tick opening range. That's unusual. That's unusual. So we've got the market kind of settling in here. But again, this is just a 1 minute chart. Whenever I look at a 1 minute chart, it gives me heart palpitations. I'm always looking to the longer time frames. So enough about crude oil. We saw a pretty decent downside opening off that opening range. What about the S&Ps? We had a late spike in the S&Ps as well. We've achieved a 5% pullback. 5% off the all-time high is 54.03, roughly 50. Nothing is finite in futures trading. A doozy. Okay, Pops. You are killing me, Rick. So open interest indicates long liquidation to the downside, but it's difficult to read because we know a week from today is switch day. We're going to be moving from December contract to March on Friday, a week from tomorrow. Switch day tends to keep the volume in the December contract. The following day, the volume will certainly be greater in the March contract. So remembering we're in rollover, we lost 18,000 in open interest on this move to the downside, which brought in some pretty decent volume even during rollover. So it's telling us that the auction process, even though it's in rollover, is looking pretty healthy to the downside on this high volume. Typically, the market is going to be bringing higher volume on down days. It was a little bit lower than the previous session. And losing 1,800 may mean that we just took out some long liquidation. I'm going to be looking, if we're going to continue in the downside momentum, for increases in open interest, which again is going to be difficult to read because, again, of rollover. OPEC agreed to the 400,000 rise in output just before the open. Thank you very much for that information, Riv. See, I knew I could count on you guys. You gotta let me know these things. All right. So we're going to kind of focus on the late spike this morning, and it's going to be a tricky day because our late spike is very long, very long. Now, if we think about the late spike and the rules of the late spike, the market has moved to a new area. Okay, this is a big move to the downside, and it did not have time to accept these lower levels in the regular time frame. So when we open in or below a late spike on the following morning, it indicates potential acceptance of lower prices, lower pricing, which has us continuing to look to sell strength. The base of the late spike is way up here, and this is what I'm calling it. It's up around 45.71. So that's a pretty big move. Settlement is all the way down here. We don't have any overnight inventory with which to help us get the market up there. And looks like we may even open, check it out, with a potential gap. If we gap lower and we can't close the gap relatively early, that's going to be a second step towards acceptance of lower pricing. And we're going to be looking for the opportunity to sell strength and continue to see this market moving lower. You can see yesterday the market went all the way basically right to a previous naked point of control. Point of control is the fairest price of a previous session. It's where the highest volume was presented. It's a very comfortable place, and it's an easy visual target for price. We got to it yesterday. We have lots and lots of unfinished downside weak structure with which to look forward to the opportunity to get to, if that is the case. Now, It's rollover. The tendency in rollover is to remain range bound. And the deeper we get into rollover, the more likely it is that our longer time frame traders will keep the cheap rollover in focus more than directional activity. Most of the people and the talking heads and people that I've talked to think that this move to the downside based on this Omicron variant is overdone. Lots of people thinking that there's lots of money out there looking to scoop up some bargains as we continue to try and push lower. And remember, we did hit 5% off the highs yesterday. It's going to be a tricky day. We don't have any overnight inventory. The base of our late spike is basically last week's low, maybe not quite, but 45.70, 45.71 is the base of the late spike. So we open in the late spike, this becomes a resistance area, the high of the late spike, or the base of the late spike. We open below it and we can't close this gap. That tells us, okay, we are continuing to accept lower prices. We're going to try and look for opportunities for sales. We get up here and we come back into value from yesterday. So we've got the base of the late spike pretty close to the low of value from yesterday. If we reaccept inside of value, that's going to mark rejection of lower pricing and a potential for price to move all the way back to the high of value from yesterday, which basically puts us kind of to the high of the week almost, right? So it's going to be a tricky day. I'm going to try and stay patient, even though the market may offer an early opportunity in the form of the opening range trade. Got to see if we open with the gap. Nasdaq, similar situation, 5% pullback. We closed down below that, closed down below weekly kickoff low as well. 15,896 is weekly kickoff low. We've got a little bit of a breakout to the downside on good volume. Open interest, we lost 1,000 in open interest, but again, that is moot, kind of. Okay, so again, I think our focus is going to be on opening with a gap or opening with the late spike. 3 lines, I will definitely explain what I mean by overnight inventory right now. Here's the 30-minute chart. Here's yesterday. Here's the move to the downside. Here's where the acceleration occurred and where the late spike began. We're going to say that the base of the late spike is around, what did I write down here? 16,111. Remember, the late spike rules are if we open in or below the late spike, it's indicative of acceptance of lower pricing, and we're going to look for the market to continue to move to the downside. So we've got 15,896 weekly kickoff low. We closed down below it yesterday, 15,869, basically our settlement price. Overnight inventory is a great question. Take a look at what we did yesterday. So what is this? Today, this was Wednesday. This was Thursday. Thursday's settlement price is right here. It's this blue line. It's really kind of close to 16,150. In the overnight activity, price moved considerably higher away from settlement. Now that's telling us overnight inventory is accumulating longs. How do we know this? Because looking at the volume, there's very little volume. There's no major players playing overnight. So when we have price moving consistently away from settlement in the overnight, we can make an assumption, a hypothesis, a guess that this is shorter time frame, weaker hands buyers accumulating longs, expecting price to go higher. When the market opens in regular trading hours, all of these weaker hands, short time frame longs are looking for buyers to come in and continue to push price higher. The market did initially kind of push price higher, but it wasn't enough to satisfy our overnight longs. Eventually, they got nervous and they all got out en masse. It took a while, but the first stop would be back to settlement. look at where the market started to base, just below settlement. And then when the market finally accelerated to the downside, that's when we started our late spike. So when we look at settlement and price moving away from settlement in the overnight, we can assume that the overnight inventory in short time frame is long. The opposite is true if the market moves lower than settlement consistently overnight. We look at the overnight inventory as largely short time frame, weaker hands traders. If they don't get what they're looking for, and that's help in the regular trading hour session to perpetuate price in that direction, at some point they all bail. They're like lemmings. Here's all the lemmings coming up to the edge of the cliff. They don't find what they're looking for, so they jump off the cliff. Don't be a lemming. Be smarter than that. Take a look and say, hey, got a lot of long inventory here. The market is up near the high of a ranging area. This might be an interesting spot to look for a long because my direct competitors might be holding too many longs. And that's really what we're trying to do here is we're trying to pit time frame against time frame. Very quite often the longer time frame will create situations in the day time frame where they end up getting the shorter time frame day traders too long or too short, and that can be sometimes how we create these late spikes. All right, so Nasdaq late spike gonna open with a gap. We're only about 10 minutes from the open. If we open with a gap, can't close the gap, leave the opening range at the high of the session, I'm going to look at that as a pretty good idea of potential acceptance of lower pricing. But if we close the gap, we can come all the way back up to the base of the late spike and still create acceptance of lower pricing. That's what I mean by the by it being a tricky day, because this market can come all the way back up to the late spike and then fall apart. Again, if we accept and value from yesterday, which is, actually overlapping higher the previous day and we close lower, it's the acceptance of value from yesterday that would indicate that the market is no longer accepting lower pricing, and there's a pretty good probability we may come all the way back to the high of value from the previous session. So there's a lot of special situations in play today, which is kind of why I'm looking at this as a tricky day. This is going to be one of those days where we got to stay patient. I'm perfectly fine with missing something. I just don't want to get beat up. I know that I can come back tomorrow and maybe the things will be a little bit more clear. And don't forget, with this virus and Washington, we are always at risk of headline risks. Always protect yourself. Always wear a stop. Gold. Rollover nearing the end. Okay, we should be trading February. Not very good volume yesterday, a little bit off, but it was an inside day and extended trading hours. Last night, we took a look down and tested our weekly kickoff low, which is 1770. You can see we got a couple of bucks down through that, but we've rejected. Back in range and back in value from yesterday. Lost 6,600 in open interest yesterday. That makes sense. We got a pretty decent move to the downside. If we had some short covering yesterday, that would make sense to me, especially because we're down near an important inflection level that has now proven to be supportive. Take a look at the 30. Here's settlement, 1784.30. For those of you thinking about overnight inventory, the market opened here at 5 o'clock. It opened here. All of our activity was to the downside in the overnight activity. When the London market opened, we saw support at an important inflection level, And all of these shorts decided, we're not liking this. And they took price all the way back, almost back to where it began, relatively close to settlement. So the market opens with a gap, looks lower, can't take out the low, can't get down to weekly kickoff low, and now seems to be intent on coming back and trying to close the gap. If it cannot close the gap, it's a sale up down below that. It may even be a sale on a gap close, but its acceptance of the range from yesterday, particularly the area of value, which we are going to be kind of monitoring for, and everything's a challenge in trading. What does acceptance mean? Is it time? Usually, when I first learned the special situation play, I would take 2 30-minute bars to close back inside of value from the previous day. Look what we did yesterday. We're always thinking about, all right, well, we opened in range in value in an area that was looking for repair. Here's our high volume node here. That's our high. Here's our high volume node here. Didn't quite get to it, but we spent all day long filling in these holes. This is a perfect repair day. Now we're just going to see if we can't close this gap. If we can't, we'll look for a test of weekly kickoff low. If we get back inside of value, we're going to look for points higher. Not a lot of huge opportunity right now in gold. I'm going to kind of back burner that. Okay, I'm getting a little bit long-winded here, ladies and gentlemen. We started to do this 15 minutes earlier so we could be done by the equity open, and here I go yammering on again. Here's the 10-year. Oh, no, we got to do the euro. Volume and open interest, rollover blurry, coming into rollover in the euro again. Centrally located between weekly kickoff high and weekly kickoff low. We talk about the tennis player that after he volleys, he comes back to the center of the range. That's where he is right now, just ready to catch the next volley, whether it's to the downside or whether it's to the upside. We lost 4,500 in open interest, and I'm blaming that on rollover. We're developing balance. We've got an inside day, inside an inside day. Rollover range taking over. Short time frame control taking over. Here's our inside day and an inside day. We're opening or have opened inside value. Stay patient. Look at the range that we've been in for the last 24 hours. Our overnight high and our overnight low look like the most interesting levels for me today, and we're nowhere near them. Well, at least not right now. Stay patient in the euro. And let's go through the 10-year and the okay, so here's the 10-year. We got 2 days, 3 days really, testing weekly kickoff high. We're in a 7-week area of balance. We've been in this balance for quite some time. Balance rules say we fade the extremes until there's a substantial breakout. Acceptance outside of the area of balance, we go with it. So far, we've been fading the extremes, and it has worked out for us. Open interest, we lost 12,000 yesterday. Kind of moot. You think there was some shorts that were still holding on, got up near this area and got out. Market always looks the best at the top and worst at the bottom. Take a look at the 30. Inside and inside. Inside value, last week's high, a weekly kickoff high, taking a look above it 2 days ago, taking a look above it last night. Overnight inventory, nothing. Try and stay cool. Stay cool. I think our best opportunity is if we get another chance to take a look at weekly kickoff high, and I love that because I'm not going to have to lose a lot if it doesn't work. Remember, always protect yourself. Always wear a stop. Nat gas. So we get a little bit of a continuation to the downside yesterday. Volume was pretty good on that breakout. We lost 2,700 in open interest. I find that not to be all that impressive. We got our hulls above price. There's nothing saying that this market is ready to turn around. We've got a swing low back here that I'm keeping an eye on, which that swing low is about $4 for a potential exit of shorts. Not necessarily thinking that it's going to be a good long. It's just when we first started looking and we first started adding this market to the market forecast, it was so sure that we were going to $20, and it's just been the opposite. Lower highs, lower lows. Now we've broken up below. Pretty decent 3-day move to the downside. But that's congruent with direction. So 3 days down and a down move. Maybe an update coming, but not suggesting that it's going to be today. The 30-minute chart. And here we go. No overnight inventory. The market really kind of just overlapping to lower as far as value is concerned. You can see that the market has been putting up lower highs and lower lows. A little concerned we were unable to take out the low of the overnight in the regular trading hours session. So that's going to probably keep me from participating unless we get back down to this level or a test of this weekly kickoff low here, which is 442. 442. So I'm going to try and still avoid the juicy, comfortable middle here and be patient and wait for something on the extremes, either our overnight low or our longer time frame weekly kickoff level there. All right. So again, yammering on a little bit too long here. We've got about 2.5 minutes before our equities open. I'm going to say thank you all for joining me. Hopefully there was much to learn, much to think about, much to use in our abilities to succeed in these markets today. And we're looking again for your success. Today is Thursday. Dan will be with you for the market recap today. And then we'll see the market forecast tomorrow. And that's going to be it for the week. I think we have a pretty interesting webinar we're working on putting together for you next week with Peter Davies of Jigsaw Trading. And we're going to look forward to doing that on top of all the other things that we put out as far as content is concerned. And hopefully all this content leads you towards success. Take your deep breath. Stay humble, grateful, and creative. It's going to be a long trading day. Get out there and profit. I'll see you in the metaphorical trading pit in 1 minute. Trade well today. We'll see you later.